Trump, or now President Trump, I've been making repeated and urgent calls for the rebuilding of our naval fleet. The president sees that need as well. He's made his own call for a 355-ship Navy. There's been little to no progress from the Navy in delivering even a bare-bones plan to realize the president's objective. That failure could jeopardize the president's chances for re-election next year. Michigan, Pennsylvania, and Wisconsin were the most surprising states that turned from supporting President Barack Obama in 2012 to voting for Donald Trump in 2016. Those three states were critical to putting President Trump in the White House. Each one of those states has infrastructure that would have benefited from an active shipbuilding program today. President Trump may well come face-to-face with the consequences of his Pentagon leadership's failure to implement his oft-promised 355-ship Navy. The Pentagon should be presenting a shipbuilding plan now. I'm Hugh Hewitt.
Public policy.
I didn't know that ships were that big a deal, Hugh.
Apparently 355 is some magic number. If you get 355, you're on top of the world. Listening to somebody the other day. Everybody tries for 355, Russia and China.
Really?
Yeah.
Business 1110 FM 96.1 KTEK out of Houston.
Oh, I don't think I can hear anything here. Turn me up a little bit. There we go. Welcome back. Jason Bible, Texas Real Estate Radio Network. Yesterday I was in Austin. We're looking at some assets over there. One of the neighborhoods I drove was not a neighborhood we're going to invest in. That's probably the best way to put it. We had a fourplex sent to us. I was out there for the Quest Trust Trillionaire Mixer. Big thanks to Quest Trust for the invite. It was a packed house. And the presentation I gave is my transition from single family to multifamily and Airbnb. And I shared a massive amount of data that I've been collecting for a few years now on why today is the best day to get started. And I'm not talking about big multifamily here. I'm talking about the small stuff. 5 units here, 10 units there, 8, 12, 30. Not these huge 100-unit packages. And I'll tell you, some of the conversations I had were fascinating. And it gets to a point when you travel around to enough real estate clubs around the country that you begin to see trends. And in multifamily, we're seeing a really big trend right now. And that trend is for real estate investors, particularly here in Texas and in some other larger markets, there really aren't that many deals left anymore. So for those of you out there who maybe are looking at getting into apartment buildings, we buy typically Class C and Class B assets. So we're not doing new apartments. Those new Class A buildings, they're a couple of years old. They're big. They're, like these gorgeous. Some are big towers, might have some mixed use in there. Just beautiful projects. But for most of us who are just mom and pop real estate investors, we're buying a building that's 20, 30, 40 years old. We're fixing it up, putting some tenants in there. The problem is how new Class C buildings come to the marketplace. You can't build Class C apartments. The joke is, if you want to build a Class C apartment, build a Class A building now, wait 25 years, now it's a Class C. That's how you build Class C. So when I drive around the city, I think I put like 30,000 miles on my truck so far this year. I drive around the city. What I see are very, very few distressed apartments that are 100 units plus. These are the buildings you can go to, and they look like an absolute war zone. They might have a fence around them. There's trash everywhere. Streets are all torn up. Parking lots destroyed. Roof has got a bunch of patches on it instead of just replacing the roof. Paint is usually, paint of the exterior is usually pretty sorted. But the problem is, at the end of the day, there's just not that many deals anymore. So I hear this when I travel around the country. Oh yeah, I became a member of this multifamily apartment group, and we just bought an apartment from another member in the group. Like a lot of these groups, they just end up selling apartment buildings back and forth to each other, just because there's really not that much out there, which is one of the reasons we're big fans of small apartments, because there's a whole bunch of those. So last night I heard the same story. Yeah, I'm a part of this group, I'm a part of that group, and basically we're just buying and selling apartments back and forth to each other. Getting an extra $10 a month rent here, $50 a month rent here, and then we're selling it, refinancing it. That's a lot of what's going on in the marketplace. There's just no new supply in the market. And I'm hearing it across the country. There's more money than there are deals. There's a massive amount of money. Now, some of y'all have been following the news. I was basically sitting in the truck all day, driving from one place to the next. So I didn't see it. But I saw it on my news websites. But if you were watching the evening news, you may have noticed the yield curve inverted once again. And so much so that the difference between those two assets was negative 52 basis points. What does all that mean? It has never been, as far as rates are concerned, the treasuries have never been so inverted since 2007. Rates are coming down, and they're coming down fast. There's an article here I've got that I'll post on our Facebook group when I get a chance that talks about this issue. What's amazing is, for every 1/8 of a point, meaning 0.125% interest rate reduction, every 0.125% increases the number of people eligible for a refi by nearly 1.5 million. So I think we're going to see a lot of single-family homeowners begin to refinance their properties. Rates are just getting insanely low. Now, do I think we'll ever see a 0% mortgage? Probably not. But we're seeing 15 years in the low 3s. And I've heard out there that there are mortgages as low in the high 2s, 2% for a 15-year mortgage. What is this going to do? We know exactly what it's going to do. All this money has to go somewhere in the system. It's free. Banks make no money on deposits anymore. They make money on fees and by lending. So if that money's not out there working, nobody's making any money. That money has to be put to work. Where's that money going to go? It could go to the stock market, although I don't think it's going to go there. I think a lot of it's going to end up in real estate. One of the things I've been saying for over a year now, if you think real estate's expensive now, just wait. Real estate is about to get incredibly expensive. Every single day we wait, the more expensive real estate gets. The money's all got to go somewhere. And I know everyone's sitting around the table at these club meetings waiting for the next real estate crash. Here's what I can tell you for Texas. It's not coming anytime soon. Southern California, maybe a little bit different, certain parts of Florida. But in Texas, I don't think we're going anywhere anytime soon. So that money's got to go somewhere. And where does it end up at? Ends up in apartment buildings, ends up in single family, ends up in the hands of Wall Street that use it for real estate. That's the reality. The only place this stuff goes is where it's treated the best. And right now, real estate has rates of return that are actually positive. A positive rate of return. Actually make money on this stuff. We get back from break. We'll talk more about my trip to Austin. Jason Bible, Texas Real Estate Radio Network. It's not on. Well, my Facebook page isn't up.
Are you looking for senior
So it's on
care
YouTube.
for your mom or dad but don't know where to start? Hi, I'm Jen Lemon with A Place for Moms. Nobody knows your parent or loved one better than you, and nobody knows senior living better than the experts at A Place for Moms. It's a free service, and we've helped thousands of families find the right place for their mom or dad. There's a place for answers, A Place for Mom. Call today.
Call A Place for Mom at 1-800-391-1755. That's 1-800-391-1755.
If you're drowning in IRS debt and can't afford to pay, then you need to take advantage of special IRS tax programs that are available and free yourself from IRS collection efforts once and for all. Due to the financial hardship consumers are facing throughout the country, the Internal Revenue Service has made it easier to settle delinquent tax problems. An open phone line has been established by Community Tax for consumers to call and see if they qualify. Take down this number or store it in your cell phone, but call the Community Tax Helpline at 800-500-5588. If you owe back taxes to the IRS and cannot afford to pay them back, or even if you have years of unfiled tax returns, there's no need to fear anymore. But you have to call the Community Tax Helpline today at 800-500-5588 for the help that you need. Don't take on the IRS alone. They can attack your wages, savings, pension, home, and even your Social Security check. Call 800-500-5588 for your free consultation and to see if you qualify. That's 800-500-5588. Need a break from the sidelines of the talking heads? Do you want information you can actually use? Information that'll change your life for the better? Then listen to the Del Walmsley Radio Show. Del will show you how to retire in 2 to 5 years. Your age doesn't matter. Turn off the pundits and turn on the passive income. Tune in to the Del Walmsley Radio Show.
Weekdays from 11 a.m. to 12 p.m. right here on Business 1110 KTUK and Business1110KTUK.com. Pastor and author of the new book, Marathon Faith. Surrendering your life to Jesus is the greatest decision you'll ever make. But that's just the starting line. Many of us begin our spiritual races of following Jesus with unrealistic expectations that hinder us from crossing the finish line. Every faith journey encounters obstacles. Just open the Bible. In my new book, Marathon Faith, Motivation from the Greatest Endurance Runners of the Bible, I write about how men and women of faith overcame obstacles and how you can do the same. Along with scriptural references, I include my own life experiences about endurance running. When things get tough, let God help you endure your race so you too can finish well. Order your copy of author John Van Hayden's new book, Marathon Faith, Motivation from the Greatest Endurance Runners of the Bible, at Amazon and at BarnesandNoble.com.
Writing a Christian
1 minute.
book, you're doing an amazing thing, getting it all down on paper. But once you've got the manuscript, then what? Well, you can spend a year or more trying to find a publisher, or you can cut right to the chase. Make your book real with Zulon Press. Finding a publisher is time-consuming and uncertain. With Zulon Press, things are quick and definite. They specialize in one thing, helping Christian authors put their books in print. Zulon Press will publish your book. Zulon Press gets it into bookstores. Your book is on Amazon. Work with Zulon Press, and there's no question you are a published author. If you're writing a Christian book, get your free publishing guide from Zulon Press. Just log on to ChristianPublishing.com. That's ChristianPublishing.com. Zulon Press. Book publishing by Christians
10
for
seconds.
Christians. Get your free publishing guide at ChristianPublishing.com. Zulon Press is a division of Salem Communications, the same people who bring you this Nifty radio station.
Welcome back. Jason Bible, Texas Real Estate Radio Network. Rates are coming down. If you're a landlord, look at a lot of equity you've got in these deals. Maybe you're a single-family homeowner. You got a lot of equity in your personal property, or you just want to decrease the rate that you pay for your mortgage every month, or go from a 30 to a 15-year. Here's a great quote. The decline in 30-year rates has been equivalent to a 15% increase in buying power Now you can pay $45,000 more for a home than last fall while keeping monthly payments the same. That's at the median home price. So just the reduction in rates over the last 12 months is going to allow home buyers to increase the amount borrowed by 15% and their payments stay the same. I was in this studio about this time. No, I was in our studio at the office about this time last year when Donald Trump started tweeting at the Fed. Mortgage rate, the rate's too high, economy's going to crash. And I told everybody then, oh, it's time to get in. We got to go all in, multifamily, single-family store. Rates are coming down. And they're going to come down hard. And it's going to take the market a while to recognize, and I mean not the capital markets, the real estate market, to recognize the spread between cap rates and interest rates. And that has actually come to fruition. That gap is widening, which is where you make your money on the commercial side. There's an article here I have not read. I just pulled it up just as we were coming out of break. We're now at a record low for the 30-year. I mean, let me say this a different way. And it's a little bit more dramatic, but it's absolutely true. There is a war on cash right now. There is a war on savers. Every day your money sits in a checking account somewhere, you're losing value. You're losing a massive amount of value. To give you an idea just how cash is cheap. Debt is cheap. Cash is all but worthless. Because the yields are so low. Hey, if you hand me a pile of cash for 30 years, I'll pay you 2%. Actually, it's below 2%. I don't know what the real number is this morning. 1.9, 1.6, something like that. You can hand me this pile of cash, and I will pay you 2% for 30 years. That is absolutely insane. This is why real estate's so attractive. You could lend your money to your next door neighbor so they can buy a house, and you'd make more than you would in treasuries. You could lend them 4% money for 30 years. I mean, think about it, 2%. To double your rate of return, that would be 4%. To triple it, we're talking 6%. I mean, we're in the world of really low rates and really low rates of return. And I keep hearing the pundits say, oh, rates are going to come up, rates are coming up. No, they're not. They're not going anywhere. We now have a world in which outside the United States, rates are either zero or negative. The United States, from a sovereign country, is the only one that's, quote, positive. And it's just barely above zero. I mean, Alan Greenspan came out and said, we might be, treasuries below zero. That might be a thing. And I'm like, you gotta be kidding me. This was crazy talk years ago. I shared with that article with you guys on Monday that all of those pricing models, all of those really great Wall Street analytical tools break down when your risk-free rate of return is zero or less. And let me explain what that means in terms that actually make sense. When you're comparing two investments, if there's no floor for rate of return on a relatively safe asset, Treasury is a great example, then how do you evaluate different assets? If I could go put this in a bank and earn 3%, that's relatively risk-free. So when I go out in the marketplace searching for a place for my dollars to go, and my floor is 3%, I'm looking for something better than 3%. Would I do 6? Would I do 7? Would I do 8? The problem is when that number is 0. Now what I have to compare it to? You're telling me 3%? 4% is a much better deal? I mean, technically it is. I mean, if they're paying 1% in a money market, and you've got an opportunity to invest at 4% rate, that's a massive swing. 4 times. So the problem is all of these financial models, modern portfolio theory, CAPM, all of that stuff was designed for a marketplace with some sort of natural balance in interest rates, where the risk-free rate of return, some call it, do it in treasuries, do tips, you can do it in money market, 2, 3, 4%. When the world is completely spun upside down, none of those models work anymore. How do you evaluate the risk of a loss? I mean, technically, if you get a negative interest rate, that's technically a loss. So here you are, your risk-free rate of return is now negative, meaning something that's supposed to be risk-free in the world of finance, you write a check for, you invest in, and you're already losing money. So now you look at an apartment building, a single-family house, a storage facility, a mobile home park, and even at 5, 6, 7%, it looks real good. All right, we get back from the break. We'll talk more about rates. It's Jason Bible, Texas Real Estate Radio Network. All right.
Know someone with a drinking or drug problem? Learn how to get sober after we share these stories.
I was 35 with 2 beautiful children when my life and addiction started to spiral out of control. After my divorce, I went into a depression cycle and started drinking more often and using prescription drugs. After my second DWI and arrest, my ex-husband threatened to take our children away from me.
I was 17 when I became addicted to heroin and meth. I thought I could quit on my own, but I couldn't. It hit me when I was arrested.
Get sober now. Your private insurance may cover the cost and we'll get you here. It's simple. Just call Elite Rehab Placement right now. Please, don't wait. Your life matters to us. 800-819-8313. 800-819-8313.
Let's see here. We're at 1.921 for the 30-year Treasury.
Woo.
Record low.
Call now before another payment is due. Timeshare compliance.
10 seconds.
Plus rated by the Better Business Bureau. Call 800-319-1080. 800-319-1080. That's 800-319-1080.
Just for grins, I pulled up the 30-year Treasury, and the chart I'm looking at goes all the way back to 86. And people keep telling me, "Oh, Jason, you said rates got to rise. Like, they got to rise." Everybody gets all worked up. Like, I've heard this for, I would do 7, 8 years now, everybody gets all worked up. All right, so gotta go up. They're gonna go up. Gotta go up. If they don't go up, everything's gonna crash. The world's gonna, it's gonna be crazy. If you look at the long-term trend, rates are going to zero. I mean, there's just no doubt about it. They're gonna go to zero. So we're at fresh new lows for the 30-year this morning at 1.92%. 1.92%. That is absolutely insane. It's the lowest ever. The 10 and 2 inversion yesterday is a new record. The closest was March of 07 before the crash. I don't think we have a real estate crash coming, but we definitely have a recession on the way. There was a great interview. What is today? Today is the 28th. So 2 days ago with Peter Schiff. And he basically said, look, guys, there's a recession coming. That's just a natural part of the market cycle. Now, how bad and how long, that's really up to everybody. It's up to kind of what government's doing. Quantitative easing is back. Rates are coming down. I don't know what else the Fed's going to do. I mean, do we? So when we get treasuries down to zero, I mean, what are we giving mortgages away? That's what I'm telling you guys. There's so much money in the system. It's a massive amount of cash. And the debt, the only way to get rid of a debt load this size, is with some inflation. You'll hear the term inflate away the debt. Or we just keep printing. I shared this with you during one show, and I'll reiterate it here. I had this great professor when I was doing my MBA in finance, and he said, I will give you a PhD in finance in like 5 minutes. And we said, okay. And he said, here's your job: to convert as much of this cash into real assets. Convert as much of your financial assets into real assets as possible. Take those dollars and convert them into something real. Real estate, invest in companies that actually do something. If you want to read some hilarious math, look at the WeWork IPO as compared to other commercial real estate ventures that have the exact same model. WeWork is running around losing a massive amount of money, by the way, telling everybody they're a technology company. And I guess that gives them that ridiculous valuation. But if you look at a real commercial real estate company, they don't lose money like that on this office space industry. WeWork is essentially like they rent office space by the room, if you will. And there are a handful of companies that do that already, but WeWork claims that since they're targeting these millennial startup kind of companies, and they have this fantastic technology, so they're really a tech company. They're not a real estate company. And everybody with real money to invest is looking around going, you guys are a real estate company. No, we're a technology company. That's why we're worth whatever it is, $1 gazillion. Yeah, but you're losing a massive amount of money. Yeah, but we're worth a lot. Really? At some point, that stuff has to stop. Or maybe it doesn't. Maybe there's just so much money in the system looking for the next project, the next deal, that it just doesn't matter. But I'll tell you, whether the entire economy collapses and I'm being paid rent in sacks of potatoes or the US dollar, it really doesn't matter. The means of production are in real producing assets. The medium for exchange, money, doesn't really matter. So trading those financial assets for real assets, that's the name of the game. That's the only game in town. And I get it. You're sitting there looking at your checking account, your 401k, mutual funds, ETFs, all that stuff. Whatever you're invested in. And you're looking at these things and you're saying, man, I spent so much time working for these little green pieces of paper so I could retire. And now I have to go put it into, an apartment building that needs a ton of work or a single family house. And I know there's a lot of risk here. How do I evaluate that risk and make it less scary? I don't think the real fear is in doing real estate. And of course, I completely understand, some people are like, well, it's because you've done a zillion deals, right? I think the real risk is in cash. I really do. Holding on to that cash is real risk because it's becoming reduced in value daily. A 30-year at 1.92. I'm looking at 15-year mortgages, and I'm wondering if we're going to see stuff under 2.5. I mean, they're practically just giving you, they're walking in. This is what it's like. You're at a title company, and you're doing a refinance, and it's like they're walking in with a wheelbarrow full of money and say, just take it. Like, you don't have to pay me for it. Just take it and pay me back over 30 years. No interest. Here's a pile of money. Just go. And you're like, what? What are you talking about? Here's a pile of money. That's what it's like. I mean, anything under, from a finance standpoint, almost anything under 7% is free money. But now we're getting into free money, like no interest. A mortgage at 2.5%. Are we going to see 15-year mortgages in the 2%? Here, just think of banking already. They don't pay any money on interest. Like their accounts have there's not really an interest-bearing account. Well, how do they make their money on fees? Maybe we'll just be doing mortgages just for the fees. That's a possibility. You pay a point, some processing fees, and that's it. And the mortgage is free. The money is free. We just want you to pay some fees, some closing costs. That very well could happen. Yeah, pay 2 points, a processing fee, underwriting fee, pay your title costs, and here's a 15-year mortgage for free. That very well could be where this all ends up over the next maybe 2 years. Free money. And here you are with your 401k trying to figure out, should I invest in real estate, mutual funds, ETF? Should I put stuff in the treasury? What should I do with my money? Because they're literally just giving it away for free at this point. So what's the real value of money? When you get back from break, we'll talk more about rates, the impact on your portfolio. It's Jason Bible, Texas Real Estate Radio Network.
Armed with time-honored family recipes, the Palm has been serving up the finest Italian fare in Houston since 1978. Come see your Palm family this week for the best chicken parmigiana or linguine-like clam sauce around. At the Palm, it's very simple. Treat every guest like their family. Serve great food and always exceed expectations. Come visit the Palm at 6100 West Summer Road or call for reservations 713-977-2544.
One minute.
The United Breast Cancer Foundation needs your help, and your donation could literally save women's lives, helping them catch breast cancer early, like they did with my mom. Donate today. 800-478-6860. That's 800-478-6860.
American veterans are more than a source of pride. They're a source of strength. When our veterans thrive, our communities thrive. With your support, our veterans can get career and education opportunities, as well as benefits they've earned.
Hello, I'm Congressman Michael Cloud. Join me in thanking our nation
10 seconds.
Okay.
Last segment.
so much. Find out how you can support veterans in our community.
This message brought to you by the National Association of Broadcasters and this station.
Yeah, I just pulled up the 10-year. So the 10-year Treasury tracks pretty closely to 15-year mortgages. So the 10-year is at 1.451%. 1.451%. And I don't know what today's inversion is. I have to look. I don't know when the economy will go into a recession. It absolutely will happen. Now, what will be the impact on real estate in Texas? I don't think it's going to be that big of a deal. Now, if you're in Class A apartment buildings, there's a big recession, big slowdown there. I think there might be some challenges. You know, where do people typically spend their money or put their money at times of higher risk? You know, Class C apartment complexes, for the most part, have been relatively recession, how can I put this, less risk during a recession. Just because everybody's got to have a place to live. If you guys notice what Rob and I are doing, it's Airbnb and small apartments. And a lot of our small apartments are at the affordable housing level. We're not buying small multifamily units in Montrose or in West U. We're looking at a deal right now in the Heights, and I like it for Airbnb. But we're not buying something that's $3,000 a door a month in rents, $1,800 a door a month in rents. We're buying these assets at the entry point for someone who isn't living with their family or isn't living with their parents or even living under a bridge. I mean, what are your options at this point? So I think when you start to get into these more expensive products, Class A real estate, even some of these Class Bs, that there might be a little bit more exposure to a recession. It's possible. But the affordable housing business, it's either live there or live in a bridge or live with mom or in your car. There's really no other options. And there's already a huge shortage of affordable housing. So I think even during a recession, rents are going to keep going up. Houses below $250,000 are going to continue to appreciate because they've got to live. People got to live somewhere. And looking at these rates, I mean, 1.45%. What's that going to put your mortgage at? 2 3/4? 3% for prime? It would not shock me over the next couple of years, and quote me on this, if the mortgage is free and they just want the fees, meaning the banks just want the fees. They will give you the money for free. Fun times, folks. Fun times. Rob and I will be here tomorrow morning. It's Jason Bible, Texas Real Estate Radio Network. Thanks for watching, everybody.